EGM Network.
Hola, hola. Bienvenidos. Welcome to Wherever We Loot Navarro. Today, I'm thrilled to be here and talk about something very important, tax preparation for first-time home buyers, and also, maximizing your tax real benefits in real estate. I'm your host, Lu Navarro, a realtor with Remax Crown Realty. Hablo español, I speak Spanish, and you can connect with me in social media for updates and more content. I always try to post new content about real estate or about the community. So you can find me as Lu Navarro, the realtor. I would love to hear from you, to get your comment, questions, and do not forget to subscribe to my channel. We have a special guest today, Jennifer Erdosia with R&F Tax Services. She is a tax service advisor with experience helping individuals and families prepare their yearly income tax declaration and also preparing them for major financial milestones like buying a home. So welcome to the show, Jennifer.
Thank you for the invite, Lou.
So doing your income tax declaration each year is something that a lot of us, are scared of. Some drag to do it, and most of us procrastinate to the last minute. And it is that taxes is really something overwhelming for many of us, especially for first-time homeowners or buyers, and some other people, property investors, or the common property owner. But before we dive in, could you share a little bit about yourself? How did you get into that tax preparation?
Yes, of course. Well, it all started basically, my financial background comes more on the business side. I do have a bachelor's in business administration, and then from there on, kind of everything led me, life, I guess, if you put it that way. I originally lived in Miami, and I started off at an office where it was a little bit of combination of services. So with me having that numbers kind of more direction to it, because initially, even with my degree, I started off trying to decide if I wanted accounting or business. So It was always there. The interest was always there. But work was what kind of led me to it. And it's been a little bit over 20 years now, ever since I've been doing accounting, everything, bookkeeping, payroll, taxes, and a little bit of everything else.
All right. So we're very glad to have you. And I want to make sure that we share some insights today about how first-time homeowners can prepare to get to that point that they are ready to buy the home. And, buying a home is a huge financial commitment. What would you say are some key tax-related steps people should take preparing to purchase their first home?
Of course, as you said, this is always a big milestone and the American dream, of course. So in order to achieve that, you need to be very organized. One is, I would say, definitely organized in record keeping. Making sure that you have all your documentation, your tax forms, and your copies. And if you don't, then have accessible your tax preparer to be able to provide you with those copies, because otherwise you will be having to call the IRS or reach out to the IRS, and it's a little bit more of a hassle. It's accessible, it's available to you, but it's more legwork. Definitely having your documentation is a key part, because either you have a W-2 or a 1099, you need to make sure that those forms are provided to the bank, because they want to see where your source of income, that you have the information for the last 2 years, which is what's going to make you qualify for a loan. And in this case, be able to provide all that information. And if you are self-employed, also being very key in providing bank statements and that you show all your proof of income through your bank statement, because obviously you can say you earned this much, but if you're not depositing, that is going to be also, it's a big factor as to me guiding my clients and making sure that they have all of that secured.
And we run into that a lot with Hispanics.
Yes.
They keep their money under the mattress because they think that they're going to be avoiding paying income taxes, but at the same time, they want to achieve that dream. So we really need to educate them with that, making sure that they are depositing correctly, and then that they are declaring that money so they are capable at one point to achieve that dream. Do you think that there is any direct correlation between credit score and taxes? How does your tax situation impact your creditworthiness when applying for a mortgage?
Yeah, it's all related. It's a one package deal. Basically, in this case, if you can have the income, but if you don't have the credit, then it's not going to qualify you because that's the baseline. I've had multiple clients come in where they have enough income, but they don't have the correct minimum score that the bank requires. So they cannot qualify. So they have to work through their credit and, doing all the proper steps and making sure that they bring down how much they owe and their liabilities, credit cards, because people think sometimes as business owners, for example, that a credit card is an expense. Yes, it is an expense, but it's really a debt. You're getting yourself into what is called a liability, and it will offset the amount of your purchase price. So it all has to do with that, in addition to the fact that obviously a better credit score you have, a better interest rate, and you could qualify for better banks and better lending options.
Yeah, people don't think that, also doing your taxes on time has an impact on applying for a loan. But, I believe that it does, because it also shows how responsible you are financially on paying your stuff. And in this case, on presenting your taxes to the federal government. So, yeah, so I believe, like you said, it's not going to impact your credit, but it's going to show who you are as a financial person. What about unpaid taxes? What should someone do if they have back taxes but want to buy a home?
So what I always suggest my first-time home buyers, in this case, if they have taxes owed, is go back to your oldest account. And if it's the smallest one, go ahead and start paying all those down. The reason why you want to go to the oldest account is because you're going to have more interest and more penalties assessing over those. So you want to try to exclude having to overpay the government for no need. So go ahead and zero out as many accounts as you can and try it, because obviously that's also going to increase the amount of possibility of loan that you can obtain. In addition to the fact, if you get to the point that, let's say the most current year, you still are at a point where you just want to do an installment agreement and you want to pay it out in a certain amount of months, you still can. That's not going to go ahead and say, it's not going to prevent you from not buying the home. It's just going to reduce the amount of loan.
Yeah, because it's going to be becoming part of your debt.
Correct.
And it's going to be taking consideration debt to debt to income ratio. All right. So let's talk about deductions. What are some common tax deductions that homeowners and real estate investor might overlook?
Well, basically, as first-time home buyers, there isn't right now, for instance, anything that will stand out as like a credit, but there are deductions. Obviously, the mortgage interest is a big one, whereas we're going to have your highest amount of paid out money throughout the year, and property taxes. A lot tend to confuse insurance. Insurance is only for those that are investing and not the home, like if it's your primary home. Okay. Like repairs as well. If you're doing repairs into your primary home, it does not account unless it's certain other factors that we can get into after that are more like energy efficient type of repairs. But those are the major ones. And then because that flows into with what we call a Schedule A, there's more deductions that come into that from tax preparation, health insurance premiums, health insurance expenses that total up in addition to all of the homeowners expenses.
Well, that's great to know. What about self-employed individuals? Are there any specific tax tips to keep in mind when preparing to buy a home?
For sure. As previously mentioned, bank statements are going to be very key, and making sure that you have a certain amount of income that you can provide. Your expensing is obviously going to be one of those where you need to qualify with a certain income net at the end of the day, regardless of the fact, but you want to make sure that you can provide that for the last 2 years.
And so this is where record keeping comes along.
Record keeping is definitely now a lot of people are, just bank statements and cash purchases, which they're okay. But if you can try to keep everything in your bank account where you're tracking it consistently, it's obviously the best. And if you can have an accounting software, many hear and say QuickBooks. QuickBooks is an easy software. Now, mind you, I have a hesitation about that because sometimes as a person who does not do anything accounting, they think that they've kind of set it up properly. So I always suggest that if you do buy it, have somebody professional in the realm of accounting to do the setup, and then you can go and continue with that because it's all said and done by default.
That's when you come along, right?
Correct. It's just because if not, it's just going to come. It's a whole mess trying to just clean up the whole situation for a full year.
Knowledge about how
correct,
to,
correct, yeah.
So and I think that some people, especially self-employed, correct me if I'm wrong, try to spend everything through their business and then nothing personal, and that really hurt them at the time of I think at the time of trying to apply for a loan and showing how much they do, which is kind of the same as putting your money under the mattress, right? So
definitely.
Yeah. So is there any common tax mistakes that first-time home buyers should avoid?
I would definitely say don't always listen to what is said to you if you haven't consulted with a tax professional. Some advice can come in helpful, but not everybody is knowledgeable in the field. So before you go ahead and assume something, just go ahead and ask your tax professional. It's just one of those where it just comes, we're getting a credit. We bought a we bought a house. We're going to get thousands of dollars back. That's not necessarily the case for everybody. There are certain circumstances and qualifications that require you to get back certain things in general for tax purposes, even just not necessarily excluding it just for home ownership.
All right, let's take a quick break and we'll be right back with Jennifer.
Giddy up and ride out to the Downtown Country Hoedown presented by GHO Homes. A big old party in Vero with live music by Justified. Midway games, a mechanical bull, line dance, and beer food contests and prizes. Admission is free. Presented by GHO Homes, Main Street, Vero Beach, Millennium Cremation Service, and Formula One Window Tint. Admission is free at the Downtown Country Hoedown. Friday, January 31st at 6 p.m. in downtown Vero Beach.
The Garden Club of Indian River County presents Garden Fest, one of the largest garden shows in Florida. Admission and parking are free, rain or shine. Garden Fest, February 1st from 9 till 5 and February 2nd from 9 till 4 at Riverside Park, Vero Beach.
It's Bluegrass Night every Thursday at Marsh Landing Restaurant. Enjoy our famous swamp water with down-home favorites like frog legs, fried chicken, and peanut butter pie. The music starts at 6:30 every Thursday. Call for reservations. Bluegrass Night at Marsh Landing in Fellsmere.
Right now at Sunshine Furniture, it's New Year sale time. Save up to 50% on selected closeout styles of Lloyd Landers, Berlin Garden, Capri, Universal Coastal Living, Four Seasons, and lots more. Sofas, dining sets, patio groups, chaises, umbrellas, occasional chairs, bedroom sets, coffee table, lots of pieces on sale now for inside and out. We're your local Tommy Bahama and Lexington store where you can create an island paradise and make your life one long weekend. Sophisticated looks with a mix of coastal and Caribbean style, Tommy Bahama Home has everything you need for your Florida living. Also, all pictures, lamps, and accessories are half price. Visit Sunshine Furniture now for our January sale. Sunshine Furniture, $12.95 US 1 in the Publix Plaza, Vero Beach. Visit our website at sunshinefurniturecasual.com. Also, don't forget to shop our outlet and sales center just across the street.
Sunshine Furniture, the best in every way.
Welcome back. We're here with Jennifer from RF&F Tax Services. We're talking about taxes. Taxes made simple. I understand that the clientele that you serve the most are Hispanics. And, I'm Hispanic too, and you too. So anybody that needs somebody that speaks Spanish and trying to do their income taxes, please reach out to Jennifer. And there is a lot of people here that do work. However, they do not work for a company or they do not have a corporation. What will be the advice from you to them preparing for taxes? Because some of them don't even do the taxes. So, and it hurts them. It hurts them more than how do you say? More than it benefit them, right? So what do you think it will be an advice for them?
So if they're just starting the business, I kind of try to always tell my clients, let's not run before we can walk or even crawl. Mm-hmm. The key part is, according to your business growth, just grow that same way. I hear sometimes clients come in and say, do I need payroll? And I'm like, hold on. It's step by step. So first, my advice is always just saying, let's get you integrated into something where you're going to have your separate bank account from your personal. First things first. Ideally, in a perfect world, you want to start at a minimum with a DBA, which is just kind of formalizing a name to your business and not necessarily making it an LLC. Okay. But obviously, that can be the next step, or in addition to like the DBA. So that way, they really don't understand that having the combined income with personal and business is a really big no-no. Mm-hmm. For the sake of anything, for record track keeping, in general, for tax purposes, when you go and you show your tax preparer, that's a walking nightmare. In addition to the fact, if you want to buy a home, then that's also not going to work out. The first thing they're going to tell you is go incorporate yourself either with a DBA or mainly so more an LLC.
And then they will have to wait like another 2 years in order to show that.
Because that's going to delay them. They cannot show any proof of that without being somehow incorporated in the more simple way or in the more complex way. But starting off with that and making a clear definition in between the expenses of your personal expenses versus your business. You want to make sure that there are some certain allowed expenses, obviously, that are basically combined with a little bit of a personal, like, just something saying simple as your cell phone. Everybody has to use their phone in order for it to be a business operational expense. You want to make sure that those specific expenses, such as business related, come out of your business account and not your personal. And if you are making some sort of, somehow you've wiggled away in there some sort of personal expense, you notate everything so that when you come to your tax preparer and you say, I can automatically see this is not a business related expense, you're going to pay taxes on it. But just making sure categorizing everything in detail and differentiating between personal and business is the key part, I would say.
Yeah, because they don't understand that they are not supposed to mingle those expenses.
Correct. You write yourself a check.
They believe that I have the money. Yeah, but they have to make a difference between personal and business. All right. So also it's very important, and I'm just going to tackle on this because I come to people, or people come to me better yet, and asking me, so do I need to do the 2 years? Can I just have 1 year and try to explain to them that, it's definitely 2 years. Can you explain what is the rationale behind that? why 2 years?
Of course. Yeah, the bank wants to see that you have a secure income, that you are able to afford a mortgage and loan to pay out. So in order for them to realize that you have a stability, basically it's showing and proving that you have stability and that you have been working in the same field too, because it's not just the same having income consistently for 2 years. You also have to show that it's part of the same field, line of work in general, because if not, then it's showing that you're changing consistently from one field to another. So the bank wants to secure, not go through situations in previous years where the economy was, it went in a downfall because there wasn't enough proof of income and the fact that you can go ahead and have the financial ability to pay back the loan, because there was a lot of just loans being pulled out as, regular income, it was just not there the following year. It was showing ginormous numbers this year, and then the next year it was. And so they want to secure basically affordability.
Stability. They want to make sure it's stability. There is one point we were talking right before the podcast, and it is about, are there any tax benefit for eco-friendly upgrades and going green? A lot of people have these solar panels, these impact windows. Well, the impact windows is more common, but solar panels or anything that now is green related, and they believe that they're going to get a tax credit. Is that a yes? Is that a no? How that works? Can you just...
Yeah, for sure. The credit is there. It is a 30% credit, but there are little tricks to that. The IRS has established that, you can buy a new AC unit that is more energy efficient. You can do a water pump exchange. You can buy solar panels and many other items. But for example, solar panels are the key part to me where I always kind of stick with my clients, because not everybody really qualifies for the 30% credit that the salesperson is telling them that they're going to get. And the part where it really just kind of is a big downfall is because it's factored into when they're purchasing it that they're getting that 30% all up front. And that's not necessarily the case. For the clients that I have had, I'd like to say nobody has qualified for the 30% upfront first, because it has to be that you would have to owe that amount of tax liability in order for you to have it all up front. So clients have had a window of anywhere from 4 to 6 year average payout that they get the full credit. And just so you know, for self-employed, because you are self-employed and those taxes have to be paid out and you didn't have an original tax liability, you don't get that credit. So before doing that big purchase and big commitment, I would definitely advise you consulting, because same here, as of all the clients that I've had, only one has been told the full information.
Yeah, so you have to really read the fine print, right? Well, thank you so much. That's excellent advice. Thank you for joining us today. How can they reach out to you if they want to, talk about, doing their taxes with you? Can you share?
Yes, of course. Thank you for having me, Lou. And yes, you can reach out to my phone number. It's 772-617-0213. And my email is rapidotaxservices@gmail.com.
Well, thank you so much. In conclusion, declaring your income taxes is a cornerstone of the home buying process. It facilitates transparency, builds trust, and, it lays the foundation for you to obtaining that financial loan in order to get to that house. Well, until next time, get your taxes done. This is Lou Navarro with Remax Crown Realty. As I always say, work on your goals every day so they become a reality. Don't forget to follow me on my social media. Please subscribe, leave me a review, and share this episode with any of your friends. Send me your questions, or if there is any specific topic you want me to cover in the next episode. Until then, take care. Y recuerda, yo hablo tu idioma. Chao, chao.